Hello, everyone, and welcome back to another Market Conversations. I'm really glad to have this show tonight because it gives us an opportunity to talk about one of the things that's the most dearest to my heart, and that is legally keeping as much of what I generate through my investments is humanly possible, right? So I have Anthony from TaxBit on, but before I bring Anthony on, I want to do a couple of things. I want to go over, without Anthony's influence, over a couple of models that I did real quick as I was thinking about what the real value proposition of a Roth IRA in crypto could really be. So what I did is I took the base max rate of my contribution into a Roth IRA, which happens to be $6,000. With iTrust, it's a minimum $1,000 deposit, so that would be $500 a month. If I had that kind of investable income, I would every other month put $1,000 in an iTrustCapital account and pay my $29.95 a month. And what I would be doing is I'd be investing, let's say we took the Bitcoin model. Now, I did some compound numbers for you folks real quick. Over a 5-year period of time, the total US dollars from me into my Roth account would be $30,179, right? $31,797. Sorry, that's the correct amount. And over 5 years, using these three factors, I used the traditional, over the last 10 years, Bitcoin's appreciated 200%. So if I followed that 200% compounded over 5 years, my $31,797 would return, get this, $36,378,066. Wow. That's only compounded over 5 years if it maintains a 200% per year growth rate, right? Appreciation schedule. That's amazing. Well, history does not always repeat itself. We can't guarantee 200%, but what I could start to take a look at is the addressable market for Bitcoin. Bitcoin as a store of value has an addressable market of upwards to $210 trillion. And we know Bitcoin's at $1 trillion market cap. Now, will it capture that entire pie? I don't know. But I do see the trend. We can all see the trend. We're all starting to study network effects. And we know each new participant comes and puts their money on the network. The network gets more valuable to every other participant. This is a positive feedback loop. They tend to catch on, especially when they're centered around value. So the other numbers real quick, just to let you know. So I did a calculation at 100%. Let's say it slowed down to 100% growth rate. Over 5 years, your $31,797 would turn into $1,455,000. Let's say it only did 25% of what it used to do in the past. 25% of what it did in the past, being 50% per year. Over 5 years, your $31,797 would be worth to you $196,448. Now, with a Roth IRA and an official designation of retirement, regardless of your age, that's tax-free money. I don't know if you can get better than that. Tax-free money is pretty cool. Anyway, got a great show. Going to bring Anthony in, and we're going to dive into iTrust. I want you folks to bring your questions and enjoy the trend that's just rolling out in front of us. This crypto revolution is real and it's happening. Let me say hi to everybody first that's actually made a comment. Simon, good to have you. Wade, good to see you. Brady. Bill Gould. Hey, Bill. We got Mr. Elrod. We've got Scorpion, one of the best names in the business. Pete Kelly had a great conversation with Pete Kelly this week. Steve Kurt, nice to have you. Tony had a great conversation with Tony today. Blockchain. I love Eagle. Blockchain monkeys. Woohoo! Lori, great to see you. DC Precise. Elipool. We got Bitcoin candy. Who doesn't like a little Bitcoin candy? Let me bring in Anthony. Hey, Anthony, come on in, brother. How are you today, man?
I'm doing well. Very happy to be here. Thanks for having me.
Well, I love you guys. I really do. I love companies in the crypto space that are truly bringing a value proposition to its customers. And as I rattled off those numbers, those are real. That's real math. That whether or not Bitcoin will do 200%, whether it'll do 100%, whether it'll do 50%, here's the bottom line. We are looking at a monetary policy that is going to continue to inflow currency into our M2 circulating monetary supply, devaluing every dollar in existence. And crypto is the antithesis of that. It's a non-correlated to fiat asset, except the price, but it's adverse. So as the inflation of the currency rises, the appreciation of the dollar value of the crypto gains. So even if you just stay on par with the inflation rate of roughly 20% per year, there's no other asset in the world able to do that because they're all denominated and based on a fiat system. And crypto isn't. Let's talk about iTrust. What I've brought up, what would you like to expand upon, or which direction you want to go?
So the most important thing, which a lot of investors don't utilize, and it doesn't even matter, young or old, a lot of people are not really focused for some reason on retirement accounts, especially a lot of crypto natives, people who didn't start out in the stock or bond market, right? They go right away to investing in their taxable accounts. I'm accumulating my Bitcoin, or I'm accumulating my Apple stock, or whatever it is. And they never even think, hey, is there a better way to do this, right? And fortunately, the U.S. government has allowed us to be able to accumulate assets and that grow tax-free. And as you alluded to, Roth IRAs can be incredibly powerful. Even, what you were kind of highlighting there was a fairly short period of time, right? Imagine extrapolating those numbers to 10 years, 20 years, 30 years. It's definitely incredible. And so iTrustCapital, we're the largest and the number one crypto IRA in America, have been growing very, very rapidly, and so happy to be welcomed by the crypto community at large, and just providing like a sort of unique value proposition right now.
Well, I think it's important, and of course I'm biased. I love iTrust. I love iTrust because I've compared iTrust to Kingdom Trust, right? It was probably your next closest, largest competitor. When you look at the fees, and I love the fact that iTrust is really transparent. Okay, it's $29.95 per month, period. End of report. Now, there is a transaction fee after you deposit your US dollars onto iTrust to acquire your crypto. It's at 1%. But if you followed the model, right? Follow the model. It's really easy to do the math. If you do 6 installments per year of $1,000, that's 1% of $1,000 is $10. Times 6 is $60. If you follow a simple, I'm taking my US dollars, I'm into iTrust, and I'm acquiring Bitcoin, or I'm acquiring an asset and I'm not going to change that asset or move that asset or do anything else. It's $60 a month. I mean, $60 for the whole, for the whole year.
Yeah, to accumulate all, $6,000 worth.
That's not a huge amount of fees.
And it's cheaper than Coinbase. I mean, like Coinbase, for example, is around 1.5 to 2%. So, it's definitely not free, right? Like we're providing a unique service. We do have to charge a fee, but we look at ourselves as sort of, Coinbase is the large traditional taxable provider. We're the large tax-free crypto IRA provider, so to speak. And our fees are less than them on a trading basis. So we feel comfortable here. And if any other competition ever shows up and is cheaper, offering comparable offerings, then we'll go cheaper as well. So we'll keep the crown of lowest cost provider for sure.
Right on. Let me say hi real quick to Jungle Inc. and Channing. I didn't get to shout you guys out earlier. So, hey, Anthony, there's one thing to be excited and to hype something. It's also important to keep it real, right? So I'm going to ask you a couple of things. First question is, how much data have you guys accumulated on the 401k versus Roth model? I've done some research on it, and it almost makes me want to throw up in my mouth, but I'd like to hear what you got first. And then the other is what would you not want in a press release about iTrust? What is truly a downside about a Roth?
Totally. So there's sort of two main type of retirement accounts, right? Primarily. So you have the 401ks, which are employer based, and then you have IRAs, which anyone can set up anytime. Now, when you leave an employer, you can move that 401k into an IRA. Now, the problem is, and this is my suspicion, this isn't hard data. I think something like around 90% of 401ks are probably traditional 401ks as opposed to Roth 401ks. So traditional 401ks will roll over into a traditional IRA. Now, traditional IRAs are still great. You can still trade tax-free, back and forth, non-taxable events. But then when you retire, you do have to pay income taxes. Whereas those Roths, so a Roth 401k into a Roth IRA, or just a new Roth IRA from scratch, you don't have to have an old 401k, is completely tax-free. And so I think for the 401k industry, the employers, I think they need to do a better job of educating their employees and saying, hey, we might have a Roth option. Maybe you should choose the Roth option, where most people default to the traditional. And so I much prefer Roth IRAs than traditional IRAs, but an IRA, regardless of which, is still better than a taxable account, like a regular Coinbase taxable account, right? So like net, they're both great. Although I like Roths better, right? Because they're tax free, because you've already paid your taxes before you contribute. In regards to say negative press, what I would say is, trying to think off the top of my head. Well, so first and foremost, a lot of people have been asking if we're going to offer like NFTs, right? So like, and this wouldn't come out as negative press unless we did it, where, just to clarify, we will never sell NFTs, and you can never put NFTs in your IRA because that's not allowed. So IRAs cannot hold collectibles, but we are going to be releasing some iTrust NFTs to be giving away. And so, but they're not in your IRAs to be compliant. So, there could be negative press if someone misconstrued it, thinking we're putting NFTs in retirement accounts. That would actually literally be illegal. We are not. But that's coming up. So, yeah, that's sort of my negative view. I'm sure I could think of more, but that's off the top of the head because NFTs are so hot right now.
Well, Tony's got a great question. It says, Anthony, I don't think jack about IRA, but appreciated you being here on the show. Can I put my kid's name on a crypto IRA?
That's a really good question. So two things there. So the I in IRA, interestingly enough, stands for individual. So crypto IRAs, or any IRA, is in your own name, but you do have to put a beneficiary on file when you set it up. So we make sure that if something were to happen to you or any crypto IRA holder, if something happened, it goes to the beneficiaries. So Tony, you'd want to look at your individual situation, but I think the likely choice of beneficiaries might be your kids then in that situation. So it would be in your name, but the beneficiaries would be to the kids.
You know what's interesting, Anthony, is that there is nobody in the business that I've spoke to or researched that I can assign a beneficiary to except you. I cannot assign a beneficiary to my Coinbase account. I cannot assign a beneficiary to my Celcius or Nexo platforms. Mm-hmm. There is no exchange that will allow me to assign a legal right of ownership in the event of my demise, which creates it's a risk. That is a risk.
Yeah, I hadn't thought about that before I started working here.
You're young, you're healthy, and you're
Yeah,
handsome. I'm
yeah,
old,
but
fat, and close to death. I think about it all the time.
not the case. You look great. I mean, just look at your tan versus mine. You get all the
Perfect.
vitamin D you need. But yeah, no, I think beneficiaries are so important. And more importantly, it's like if something were to happen to someone, whether it's you or me or any listener, I don't have a list of what I have at Coinbase or Gemini or Kraken. No one would even know those places exist. And Coinbase ain't calling you to recover your assets. So yeah, we do require that, and it's for the better.
I think it's very important. It's something we don't talk about in crypto a lot. But, people die. Unfortunately, every single one of us will. And we don't know when. Yet, you're the only guys in the crypto universe that I've ever looked at that offers that option. Okay, we got a couple others. So we got P. Kelly comes in. When will we, the clients, be able to begin staking our assets on iTrust?
That's a great question. So
it's a good question. I want to know the answer to that. Fire away, young man.
So the most important thing for everyone to understand is that in order to ever stake an asset, the custody or the wallet system you're using has to offer staking, right? And before that, the asset has to be stakeable, right? And there's misconceptions in crypto of lending versus staking, where
Right.
some people will mix those terms. Lending is like a BlockFi, a Celcius. Staking is like a proof of stake system, like a Polkadot or an Ethereum 2 or Cardano, right? So for staking in particular, again, our custodian is Curve. It has not been completed, but they are likely going through acquisition through PayPal. Our most up-to-date information is that it's business as usual, but obviously PayPal is now going to be there to maybe improve things, whatever that entails, right? So long story short, we have Curve as our custodian, recently acquired by PayPal. That's only good news. It's business as usual. Now, Curve is one of the most innovative custodians out there. They are working on their Polkadot staking abilities, where we're again keeping the security that we have, which is a cold storage 2.0 type of system, which you can find on our blog. And then Ethereum 2, I've been working closely with them to hopefully be able to get that up and running soon. It's hard to say deadlines. I'm really hoping for the second quarter or third quarter of this year to be able to either push for one asset to be staked, whether it's Polkadot or Ethereum first. It's hard to say. And then lending on the completely other side, we're actively looking into ways to lend out assets. And this is more my opinion and focusing on product and strategy for the company. Is a lot of lenders out there are now operating in fractional reserves, and I'm not going to name any names because some of them have proof of reserves and some of them don't. But we want to, when we do provide our lending services, we do not want fractional reserves, right? We want one to one. We want your retirement accounts because it's different. Taxable money is different than retirement money. The security and the safetiness and the conservativeness should be different. So we're looking at options for lending to be as secure as possible. And I would assume that's sort of like a Q3, maybe Q4, but who knows? And so we do have some exciting things in play. We're looking at different protocols to be able to do that. But that's a long-winded answer. I apologize.
No, I appreciate that. Bill Gould had a question. Bill, check out iTrustCapital.com. You can see all the assets that are available on the platform.
And then if you do sign up for an account, use Jerry, Gerry. You'll get a month for free, and it's just a good business.
I got a link in the description of this video. Is it G? You spelled my name with a G?
Jay. Oh my gosh.
Don't make me come back to the United States.
Oh man, it's Jay.
This is something I wanted to ask you about because I think it's really important, and I know COVID brought a unique situation in play with this. So I'm just gonna start this off with my absolute disgust for the system of employer-backed 401ks. Number one, without exception, I can't find one single provider that has less than 3.3% managerial fees per year. I can't find one single decent company that will allow me to self-direct my 401ks. The options they give me are mutual funds. Mutual funds have a whole nother set of fees associated to them. So yes, I do enjoy the tax deferred cash in, but when I look at the rate of monetary expansion, the performance of these mutual funds, which there are $21.5 trillion sitting in mutual funds that are gathering 3.5% on average fees, it doesn't make any sense. And I got people in our investment club that are doing $20,000 a year into their 401ks. And if they can get around to it 5, 6, 7, 800, 1,000, 1,200 into their Roth IRA, if they even have one. So my question to you is, did COVID bring about a clause or a relief to 401k holders to retrieve their 401k funds without penalty or reduced penalties? And could those funds be put into a Roth IRA, let's say a crypto Roth IRA with iTrustCapital link below, wink, wink, and get to work on building some tax-free retirement?
Yeah, so the mutual fund industry and traditional finance is, as many people believe, in my opinion, is sort of held captive, right? They're not innovating. The old guard has full control and is charging really outrageous fees. And what's really crazy is, like, if you look at, the mutual funds, the heads of these mutual funds, these guys are hogging in, hundreds of millions a year probably in just like management fees, right? So it's unreal. Self-directing provides you that sort of ownership and lower fees and still a great service or superior service. In regards to that, what was your second question again?
Well, my second question was the
COVID clause.
The COVID clause about the withdraw of 401k funds. It used to be you took the tax hit for the whole enchilada. If you did it, you took the tax hit for the whole enchilada right then and there. Before I give it to you, I want to finish my rant on this 401k thing. 401k tax deferred going in. Okay, great. When do you have to pay taxes on a 401k? Guess what? When you start receiving distribution. When do you start receiving distribution? At the time in your life where your income is the lowest and you can at least afford to pay taxes. What? And I volunteer for that? It makes no sense. It's ludicrous. But okay, my rant is now over. Now we're back to the regularly scheduled program.
It's a great point. I mean, in regards to the COVID exclusion, yeah. And so people, you'll want to do sort of your research on this. I strongly suggest speaking to an accountant, but because there's various interpretations for this, which I've seen. And as you guys know, sometimes laws are not so clear, and you'll have literally different accountants or lawyers telling you different things. So to clarify, this is my opinion, and I suggest speaking to your own advisor or accountant. But there is an interpretation where, if you were affected by COVID, you can withdraw your 401k out early without this 10% penalty. And there is some sort of requirement for you to put it back into another retirement account. Now, that's where the interpretation comes into play. And speak to your CPA. You might be able to put it into a crypto IRA, but you'll definitely want to make sure you speak to counsel, because some can interpret it that it might need to go back into the same 401k. And I'm not an accountant or a lawyer, but I have seen people have sort of differing beliefs there. And in my opinion, I would hope that you could take it out of a 401k and put it into an IRA, as long as you're following the laws, right? I don't see anything wrong with that. But again, you speak to an accountant if anyone has that opportunity that they want to try to pursue.
Well, I'm just going to say it right out there. This show is about becoming a better investor. So if you're an investor and you've got a company match 401k, I'm going to say it behooves you to find out the particulars, understand what it's costing you. If your employer match is getting eaten up by mutual fund administration fees and administrator fees by the one who's offering the 401k, then what is the point? What is the point? deferring taxes till your retirement and the time where you can least afford to pay taxes. Think about it. And if you can utilize the COVID clause and get out of your 401k without penalty and get it into something where you can have a tax-free, self-directed retirement, it behooves do the homework. You know what I mean? Don't defer your wealth strategy or your investment life to others. They're interested in their fees. They're not interested in you. You're the only one interested in you. Trust me. And well, maybe your moms are interested in you. You know what I mean? But
Totally.
Do you want to expand on that? I think, let's see if we have any other goodies here.
I know Bill asked if when having a crypto account, is it just Bitcoin or can you buy other assets? And so for iTrustCapital and our crypto IRAs, we offer Bitcoin, Ethereum, and quite a list of other assets. We recently added Stellar as well as Polkadot, and we're looking at new assets really all the time. We also have gold and silver, physical gold and silver, vaulted at the Royal Canadian Mint. And so, which is really interesting because if you don't want to be 100% in crypto and you don't trust the dollar as your store of value or your reserve, you can have a little bit of gold as well. iTrustCapital.com/fees has the whole list as well as the fees. But yeah, you can definitely have more than Bitcoin.
Right on. Well, Tony's got a great question. I know the answer to this. Once you open the IRA with USD going forward, can you fund with crypto?
Yeah, I wish. So no, I wish. The reason why is the IRS requires contributions into IRAs to be in dollars, and it makes sense, right? Dollars reserve asset. They got to protect their bases. If we were allowed to get contributions to retirement accounts with crypto, I don't think people would be touching the dollar anymore, right? They would be all in on crypto
somehow.
Yeah.
I mean, you have to originate, but I would have loved to be able to take part of my existing portfolio, migrate it over to iTrust,
and throw it in the IRA.
A heartbeat. I mean,
Totally.
It would have been. You would have seen nothing but a vapor trail, a digital vapor trail.
And on the bright side, we are looking into the potential ability, and this would again be the second half of this year if it goes live, the potential ability for someone to send their crypto in. But it would convert to dollars and then go into the iTrustCapital account. So like it would feel like you're sending crypto, which is great, but it would still convert, which could be a taxable event, and then it would arrive as dollars. But hey, maybe you don't have money in your bank. Maybe you keep that safe and you have crypto. That's still a reasonable option. And that's not live now. We're looking into how that might function.
Well, I would imagine that you would get some participation.
Definitely. I think so.
You know what I mean?
I would do it every year.
Yeah, and I work a lot with TaxBit. I love TaxBit. I don't know how familiar you are with them, but I love them. And the tax optimization element, if I've got a loser, I would send that to iTrust in a heartbeat. I'd have no capital gains to consider.
Yeah, capital loss maybe as well, and then you get it in the Roth too. Yeah,
exactly. More money. Because the appreciation going forward is why you hold an asset. That's the only reason to hold an asset is the future appreciation value.
Totally.
Otherwise, we would all just be dealing in the depreciating dollar.
Totally. And then it's important for people to avoid like sunk cost fallacy, which is us as humans, we fall to sunk cost fallacy, which just means if you're looking for your investment, don't look backwards and say, oh man, I already been holding it for 6 months. It went down. I got to keep holding. You want to analyze everything only moving forward. The cost of the past is over and you don't put weight on the past. And again, this is sunk cost fallacy. You can look this up, but important to understand as a crypto investor, which, Jerry, but for everyone listening.
Well, I'm also old and biased, so I have a tendency to look backwards sometimes.
Me too. Yeah. Sunk cost is hard to get over.
So Pete Kelly asked, which new assets are being added next?
That's a good question. So we are actively integrating with new liquidity partners. So companies like FalconX, companies like Coinbase Prime/Pro, depending on the model of that. They have quite a range of new assets. And so, iTrustCapital, we are a platform that plugs into institutional liquidity, like these Enigmas, Falcon X's, Coinbases. And then we have institutional custody that plugs into the curves of the world, right? And so we're looking at new liquidity partners who would bring new assets. Falcon X is likely next. The first ringer up would probably be Chainlink, because that's been taking a while. And then it's hard to say what comes next after that. We'll probably be asking kind of clients for feedback.
Well, do that on Twitter. There'll be no shortage.
Yeah.
There's no shortage of feedback from Twitter.
Totally.
Bill's got here. Bill, this is an interesting question, and this leads me to believe that this is a topic that I think would really behoove you, Bill, because there is a lot of complexity in your question. Here he asks, if you're starting a retirement account, whether it be a 401k or a Roth from your pay, is it taken out of your pay pre-tax or post-tax? That is the definition of 401k versus a Roth IRA. One's pre-tax, one's post-tax. You want to elaborate on that, Anthony?
Yeah, definitely. So, Bill, in this sense, a 401k is typically going to be provided by your employer, right? So 401ks, if anyone has an employer and they're wondering about 401ks, direct those questions to your employer 401k provider. Now, IRAs are, again, sisters or brothers of 401ks, but they're different. The IRAs that we offer are not connected to your employers. They are not connected to your paycheck, so to speak. They are independently owned by you. The individual, again, IRA, individual retirement account. And so with us, you can open a Roth IRA and you can contribute to the Roth IRA. And the money that goes in is typically money from your bank account that you've already paid taxes on. So Roth IRA contributions are money you have already paid taxes on. And again, we don't take money from paychecks. We don't take money from jobs. We take money from you contributing from your bank account to the IRA. If you do a Roth, again, it's post-tax as long as you paid your taxes, right? Which anyone who has money in their bank account, they probably already paid their taxes. If you do a traditional IRA, which is also an option, you just basically get a deduction or a tax write-off. So you would bring it to your accountant at the end of the year and you save a little bit on taxes. But again, when you retire, you would have to pay taxes. So that Roth IRA is where you pay no taxes when you retire. It's truly tax-free growth. And we have articles about that online, or you can, traditional versus Roth IRA, a lot of good information online.
Right on. Great to see you. Hey, Nick Black from Crypto and Coffee's in the house. Nick, nice to see you, man. Glad you could stop by. I got one last question from the audience, Brady, before I bring in Bida Av. Brady, this is actually very deep question. What does the government gain in this agreement from offering its citizens this tax incentive?
That's a really good question. Now, I don't know factually why these were introduced from a legislative point of view, but I would assume it was to incentivize saving, to incentivize Americans to have money put away. And if you are willing to put that money away, you get some tremendous tax benefits. And, it lowers the sort of burden on the social system from people retiring and maybe not having money. Again, that's just my opinion. It could have been created for a totally different reason.
Excellent. Tony, I'm going to get to this question. What's the minimum amount of the $1 needed to open an IRA account? Now, we're talking about iTrustCapital. If you open an account, it's $29.95 a month, whether you put in $1.50 or $6,000, which is the ceiling per year. So if you're looking at doing this, you do it as part of a strategy. Don't willy-nilly into something like this. You got to think about this. But I will tell you, anybody who's got a 401k or a regular IRA, a Roth IRA with a max contribution of $6,000 a year, which is your max, it's only $500 a month. With iTrust, you can do 6 installments of $1,000 and ensure your tax-free, your tax-free retirement income or assets. Anything less than that, it may not be beneficial. So you need to run the numbers and understand, does this fit into the goals and the strategy that you have for creating your quote unquote wealthy retirement lifestyle?
Exactly. Yeah, it is technically a $2,500 minimum, but as Jerry said, we have a monthly fee. So you got to think about that, right? If someone just even throws in 2,500 and never is going to put money again, well, you're still paying $30 per month. That's over $300 per year. It might not be wise. So it's just important to do the calculation. But for people who have an old 401k or rolling it over, or people who are going to just open a new IRA and put in, a couple thousand a year and be consistent about it, maybe hit that max, right? 6,000 per year if you're under 50, 7,000 per year if you're over 50. You get an extra 1,000 if you're over 50. You just want to make sure that you're thinking it through, right? You'd hate to put in a little bit, never put in more again, and you keep getting hit with $30 a month that could have been compounding elsewhere.
Right. And with that, let's bring in an iTrustCapital client and a dear friend of the show, Bitta Av. Bitta!
Happy Friday, everybody.
Hello, happy Friday.
How are you?
I'm all right. Been a relaxing day, so I'm good. How are you? How's everybody?
Life's good.
Good, good. I have one personal question that relates to me, and then I have a couple that are not very personal. So now that I have a 401k with my old employer. I'm calling it my old employer now. I've stopped working for a little bit. And I wanted to, and I do have a Roth with you guys, and I wanted to roll it in there. So if I want to roll it into my Roth or IRA, like, am I opening another account because I'm rolling the old 401k, or is this going to be together, or is it two different fees?
That's a really good question. So the first question is always from your 401k. Is it a traditional 401k or is it a Roth 401k? Now, 9 out of 10. Yeah, okay. 9 out of 10 times it's a traditional 401k. And unfortunately, I think it's because employers are not really good at telling people, hey, we have a Roth 401k option, or hey, try this. And most people, they put you into the traditional right away. So long story short, if you were to take your traditional 401k and roll it over into iTrust, it would arrive as a traditional IRA, right? Traditional 401k into a traditional IRA. So now theoretically there, you would have two accounts if you wanted to leave it like that. Now, anyone at any time has the option to convert, and this is called a conversion, a Roth conversion. You guys can look it up. I'll briefly explain it. Anyone at any time has the option to convert a traditional IRA into a Roth IRA. Now, converting a traditional IRA into a Roth IRA is a taxable event. Now, the reason why is because with traditional IRAs, it was pre-tax money that you never paid taxes on, and it needs to be taxed eventually, and so it gets taxed when it goes into the Roth. So what a conversion is a one-time taxable event. It increases your income for the year, and then it grows in a Roth forever tax-free. And so, just for numbers' sake, let's say someone had a 401k with $20,000 in it and they wanted to move it into a Roth IRA. That would be a conversion, and your income would go up by $20,000 for the tax year. And so depending where you live, that might cost you, I don't know, $5,000. You'd want to work with your accountant to run the numbers, maybe $7,000, I don't know. But then that $20,000 would live in a Roth forever. But then you'd owe the taxes at the end of the year, and it wouldn't come out of the Roth. The money that goes into the Roth that rolls over, all of it goes into the Roth. All of it stays safe to grow tax-free. But then when it comes tax time, you're going to have to cough some money out of your pocket for those taxes. And again, that's optional. If not, you would be opening a traditional IRA, and it would be a second account, and it would be a second monthly fee, unfortunately.
Okay. So when you're going into from the traditional to your Roth, you're including it.
Yes.
As far as I just completely lost my train of thought now. That it happens sometimes.
It's because I went so long. Sorry.
No, you had said something that triggered a thought, and then I just lost it. So I'll leave it.
Just to clarify, though, if you were moving it from the traditional 401k into the Roth, you would still only have one Roth account with us. So you can have one Roth. Okay. You can do cash contributions every year. You could do a 401k rollover. You could do an IRA transfer. It's all just one account, one monthly fee.
Okay. I got a quick question. that piggybacks on top of that. So Anthony, let's say I'm bitter, right? Let's say I'm young, I'm beautiful, and I just left my job and I've got a 401k and I'm thinking long term. Obviously, tax-free appreciation is it's the creme de la creme. Okay, so I'm going to do this, and let's say it was 20,000, right? So I do this, and it goes through, and I'm going to have a tax bill at the end, or by April 15th of 2022, and I'm prepared to deal with that. The 20,000 conversion, how does that affect my 6,000 per year cap?
That's a good question. So anytime you do a rollover, anytime you do an IRA transfer, anytime you do a conversion, any of these things does not affect your cash contribution. Your cash contribution, your 6,000 per year, this is something that you have a right to every year, regardless if you do a rollover, regardless if you do an IRA transfer. Every year, you can always contribute that 6,000. And you can also do some rollovers. Rollovers or transfers are unlimited, and you can still do your cash contribution, which is limited.
Wow.
Hopefully that made sense.
Bida, I know you had some more questions, but I promised Anthony his hard out.
I got about 10 more minutes. I have till about 6:55. So
fire away.
Awesome. Well, that was actually the question. I was like, the maximum contribution is going to get affected or not, but he answered that. So that's awesome. And there's no way of increasing your, unless you go over 50 for the next year, like there's no way of increasing your contribution, your cash contribution.
Correct. Yeah. Long story short, that's correct.
Don't be in a hurry to get to 50, Bida.
I'm trying to
She wants the extra 1,000.
Yeah. Or any extra, right?
Yeah.
So when you retire, let's say I have my my Roth. When I retire, am I getting the dollar amount, or does somebody, when they retire and they're of age and they're able to pull out, is it only in cash, or do you get the actual coins? Like, let's say I have Bitcoin or XRP or something like that. Do I get that, or do I only get the cash after it's been sold or converted?
That's a good question. So anytime you file for retirement and you take money out, traditionally a financial services firm will make you sell and make you take dollars. Now we offer what is called in-kind distribution. So when you retire, you take distributions. Now, luckily for you or for iTrustCapital clients, we allow in-kind distribution. So if you don't want to sell for dollars, you can take out your Bitcoin or your gold or anything in the same kind, in-kind distribution. And so if it's Bitcoin, you provide us your public address, or your public wallet ID. We'll send that to you and do with it as you wish. If it's, say, gold, we load you up a Kitco account, one of the leaders, and you can place your order and get it delivered. And that's really great because, we never know where we're going, obviously, with the expansion in monetary supply. And so in 20 years, you might be like, I'm not selling for dollars, right? Just send me the Bitcoin or whatever it is. And so we do have the in-kind option.
Just imagine me doing a dance right now.
Yeah.
Like, seriously, I did not know that. So just imagine me dancing. This is awesome. Like, seriously awesome. I did not know that at all.
Yeah.
Oh, wow. Okay. And the last one is kind of like I don't know, it might be a weird question, but how does the DeFi space affect your business model?
That's a really good question. I spend all my time outside of iTrustCapital interacting, using DeFi, and studying it basically full time. I believe that if positioned correctly, and if we find the strong developers that I believe we can, you will be able to access decentralized finance tax-free inside of your retirement account on iTrustCapital.com. And this is hard to say timelines, hard to say what that looks like, but I believe it's possible, and that is the ultimate vision for you to be able to lend and stake and borrow and everything from these open source, open source DeFi protocols that are mostly built on Ethereum, but a lot of exciting other platforms popping up. And it's it's amazing watching the future of finance be growing right now. And I hope that we can be the bridge.
Well, I think it's great. I've got a quick question for you. This question is on behalf of Bill Gould. And that is, an iTrustCapital account if I relocate? Let's say I love earning in Bitcoin, but I love spending in the Costa Rican colony. So I've moved to Costa Rica. Can I still have an iTrustCapital account?
We don't discriminate. At the end of the day, you'd probably want to work with your accountant for tax purposes there, because I don't know what that looks like if someone had, say, a traditional IRA. They move out of the U.S. and they use like a foreign income exclusion, and where you don't have to pay income taxes. But long story short, no, we don't discriminate.
I don't
a
need
U.S.
a resident in the United States to take advantage of iTrustCapital.
To open account, IRAs are for U.S. Passport holders, U.S. citizens.
I said resident.
Residency does not matter to my knowledge. That
Excellent.
It goes through our KYC AML team.
Right.
So don't quote me on that, but I believe
let
that
me
is the
in,
case.
Anthony. So
Yeah.
they let me in. You guys are obviously willing to scrape off the bottom of the barrel. Diamond Dave, he answered this question, but I'll let him answer it again if he wants. If I have coins on Coinbase, can I use those to transfer to iTrust Roth IRA?
So unfortunately, the IRS requires you to contribute in dollars, but one day we hope to hopefully have the ability to do that. But more news to come out in the future. For now, unfortunately, you need to contribute in dollars for the foreseeable future.
All right, Pete Kelly, is iTrust looking to add products such as DPI?
Yeah, Anthony Sassano, one of my really good friends, is kind of leading strategy and product there at Token Sets. DPI is an amazing product. Right now, there unfortunately is not a lot of liquidity for that on the sort of centralized market. It would be a dream to have DPI for people, and probably not yet. It's a little immature from a liquidity standpoint. Great product, but it's hard to get liquidity to support like a institutional platform like us. But great product.
Excellent. Bida, do you have anything else?
Nope, those were my questions. I think I've talked to enough iTrustCapital guys now that I feel like I have a good feel.
Yeah, you're a professional.
Right. And the neat thing, I'll just add this, one of the great things about iTrustCapital, one of the things that I really like, besides being able to assign a beneficiary, which they're the only people in crypto I know that I can do that, other than TaxBit, which TaxBit has the creme de la creme customer service, iTrustCapital has impeccable customer service. Coinbase don't, no exchanges do, Nexo, Celcius, they all suck balls. iTrustCapital, TaxBit, the only two entities in crypto where I can pick up the phone and talk to somebody that knows what they're talking about.
Yeah, we pride ourselves on being able to talk to humans first and foremost. I mean, in a world where everyone is sending people to robots and outsourcing, we do get very busy. We're scaling our customer experience department as quickly as possible. But I mean, if you can schedule a call, talk to a human. They're all trained in retirement accounts, sort of crypto knowledge as well. So no financial planning or advice, but you're not going to get on the phone with someone who doesn't know what a Roth versus a traditional IRA is. So it's good.
Right.
Could be better.
Well, I want to thank you. I'm looking at the clock and I'm going to respect your heart out. I want to thank you, Anthony, so much for your time with us tonight and let you know that I'd like to get you back on the show before the end of the year and talking about it again. But it's if you guys continue to provide the service that you provide, keep your rates low like you have, don't start jacking our rates up on us. I think you got a really bright future in front of you because people that are learning about monetary policy and are understanding the economic effects of the choices they make with their investment dollars, the path is so clear. Go ahead and take your tax dollars now and get them into something that will appreciate tax-free.
Completely agree. Yeah, looking at crypto assets and the trajectory, and then being able to be so blessed to have like a tax-free option as an American citizen. If anyone is not taking advantage of it and they learn about it now, and then in 10 years, you're going to be like, oh, I should have listened to Jerry.
Well, you could say that. I mean, I got 3 ex-wives I put in that category. Joking about listening to me, not about the 3 ex-wives. Okay, Anthony, thank you so much for your time. We're going to wish you a pura vida And until next time, man, keep up the great work. I really like doing business with you guys. I really do.
Yes, thank you. And I'll see you in Costa Rica hopefully sometime this year. Thank you, Bida. Thank you to all the listeners, and we'll talk in the future.
All right. Pure vida, mi amigo.
Cheers.
Oh, Bida, what do you think about that?
That is so awesome that I did not know that you can take your crypto out the way it is, like as far as like whether it's, like, what does he say? What, like account?
It's called like kind.
Like, I like that.
Yeah,
I like
kind.
the sound of that.
Well,
because then
like
you can
Nexo
keep
or
it.
Celcius, you're getting your interest in like kind. So if I put Bitcoin on Nexo, the interest they pay me is in Bitcoin. It's in like kind.
That is amazing. Like, maybe they told me 4 months ago and I didn't understand what the hell that even meant. It just kind of just went over my head, or even didn't realize how big of a deal that was. Now that I'm like very immersed in the space, it's like, it is a big deal. Like, it's amazing,
You might
and then
even find a real advantage with your particular situation. You just disclosed on, so I'm not like outing you or nothing. You just left a company. You had a company sponsored 401k. It's got value in it. Well, do you want that value to appreciate from, tax-free? Or do you want it to appreciate and have to pay taxes at the end?
yeah,
It's something
no-brainer
to
at this point.
and yeah, it really makes a lot of sense. You just do the math. It's like, oh, okay. It's one thing when we were looking at a market. This is, for me, more than 3+ years ago, looking at a market where all the stuff was the same, right? Everything denominated in dollars, obviously valuations in assets were being not driven by the merits of the individual company, but by the mechanisms of monetary policy, right? The S&P 500 is up and continues to crash through all-time highs, not because those companies are producing more and better products. It's because asset inflation is going with monetary expansion. Right.
And it's great to be able to understand what that even means.
Yeah.
Because in the beginning, when I first got into the space, the fact that I didn't know all these things put me in a position to, to say, I don't even know if I invest in this or that. Like, I don't know what the difference was. And when you start, learning the differences, then all the little subtle differences make a huge difference in your portfolio. And it's amazing how much you can save and how much you can acquire by just knowing those things.
I could not
even changing anything.
Yeah, I might have learned this on Nick Black's show. I can't really put my finger and remember the exact moment the light bulb went off, but it was when I got to a point where I could separate myself from the noise and only looked at a couple of the metrics that were important, right? The only metrics that are important is how much value is my dollar losing. All right. If I understand that, then it makes investing in assets very easy. Does this asset grow more than the cost of my dollar purchasing power going down? So if that rate, let's say, we know it's 20% now, it used to be 8%, but now it's 20% of the US dollar value is going down every year because of the expansion of the money supply as evidenced in hard assets. All I got to do is find assets that generate a better than 20% a year return.
Right.
Well, those are not very common. Tell me how many of those you know of.
Outside of crypto, none.
Exactly.
Maybe.
A couple of emerging market stuff. There is some stuff, but it's not like there's a big, easy list of them.
Yeah, unless you are very knowledgeable in the stock market or even in the real estate market, you have to be very seasoned and very knowledgeable and have a huge amount of knowledge for you to beat the normal return.
Well, I mean, real estate values are going up. They are. They're keeping pace with monetary expansion. But here's what people they look at the price of the real estate. They don't think about any of what we would call the variable cost of owning the real estate, property tax, maintenance, etc. If it's an investment property, can you raise your tenants' rates 20% per year?
No, I mean, that's huge. 20% is a lot because their
You
pay
wouldn't
is
have
not getting
tenants.
increased.
You wouldn't have tenants. They would leave.
Yeah. That's
So
a lot.
you
20%
can't.
is a lot.
Investment property, you cannot beat the cost of monetary expansion.
Yeah.
Gold, you cannot beat the cost of monetary expansion. Barely with the S&P can you beat monetary expansion. NASDAQ. But can you? Where do they ceiling out? Are you picking the right companies? I guess, 10 years ago, if you put your money in Apple, Google, Amazon, Facebook, okay.
I mean, there's still people that are able to do it, but it just required a lot of work in their part to understand, like to get there. It's not like you can be a new person like me jumping into crypto last year. I wouldn't be making the same gains in the traditional market that I would do in
it
crypto.
conventionally. They have to utilize leverage. Anytime you add leverage, you add risk.
Yeah, but you can go the other way as much as you can go up too.
That's what I'm saying. It's risky. So you're right.
Yeah.
There are some people that have mastered the game and doing pretty good at it. For the most of us, the best straightforward bet is to find an asset that is consistently exceeding the monetary expansion, which is the hurdle rate or cost of capital, so that you can stay above water. Let's see what Simon says. Simon's always got good stuff. Jerry, can we shout out Celcius? I sent 10,000 worth of XLM to my wallet and didn't add my ID memo to the transaction. They found my crypto within 5 minutes and put it in my wallet. That sounds like good customer service to me. I'm a Celcius guy. I've got a Celcius app, but I do not use it personally. I'll be honest. The Celcius app is what the Beyond Moon Investment Club fund is on. So the fund that the Patreon group created is on Celcius, and I didn't want to commingle the fund money with my personal money, and I couldn't have two different Nexo accounts. So I just opened a Celcius account. And it's fine. I don't got any problem with Celcius. It's good company. I also got a BlockFi account for my daughter.
Oh, nice.
Yeah, you want to hear this great story?
Yeah.
It's gonna be my daughter's wealth creation story, but it was a complete deal for me. So I had forgotten 100 years ago that I bought $50 worth of Bitcoin on Coinbase. I don't use Coinbase. Haven't used Coinbase in a long time. I do all my stuff on Uphold just because it's easy. I like it. I'm used to it. Well, I go back because now I need to use Coinbase for something, and I've got $450 worth of Bitcoin.
That's awesome.
I'm like, wow, this is really cool. So I open a BlockFi account. This is for my daughter. And I moved the $450 worth of Bitcoin over to BlockFi to earn interest in kind, which is in Bitcoin. And she will get that BlockFi account when she turns 21. She's 11. That's 10 years from now.
You can open it under her name?
No. I opened it under, no.
Your name.
It's for her.
Oh, okay.
So I will have nothing else on there. It is hers.
Nice.
For me, it's a way of creating an account for her.
That is awesome. No, that's wonderful.
What do you think $450 worth of Bitcoin today will be worth in 10 years?
Oh, Lord. A lot. Hopefully.
It will be hope.
Yeah.
I'm hoping it will pay her way to a nice college. which is what?
I don't know.
$40,000 a year plus room and board.
Yeah, part of me feels like I don't think I would force my daughter to go to college unless she wants to do something very technical like engineering or some sort of, I've lost my sense of why kids have to go to college. Like, I think part of me feels like maybe not the traditional way, like unless you want to be a doctor or something very technical. I don't see the point of if they, yeah, I don't think I would send my daughter to go get certain degrees. It's like I'd rather her have like very strong financial education and just kind of do her own thing. I don't know.
You can't say. I will tell you, the number one investment any human being can make is in their education. Now, with that being said, education is free if you want it, right? If you have the discipline and the perseverance, you can learn anything. We have the internet. Simon wants to start a fight. I love it. Gold can beat monetary expansion. Well, my aunt could grow balls and become my uncle, but she hasn't and most likely won't. Gold is getting crushed. Gold has not beat monetary expansion for the last 15 years. What, Simon, do you think has changed that will all of a sudden create a dynamic where gold will beat M2 monetary supply? Gold's been averaging 2% a year over the last 10, 12 years. What makes you think it's going to change? I like gold, but gold, it's a loser. Everything is a loser except crypto and the NASDAQ and the S&P. Everything else lose ground to monetary expansion. Where's the safest place to stake Bitcoin? Well, safest is relative, right, to whatever your personal risk tolerances are. Platforms like Celcius, Nexo, and BlockFi have proven over the course of X years, right? Nexo 3 years, Celcius a year and 11 months, and BlockFi same period of time, have proved to continue to pay on their accounts without incident. Bitcoin, P. Kelly, Bitcoin is finite, gold isn't. Well, it's a really interesting story. When the price of gold goes up, gold miners are incentivized to work harder and get more gold. Price of Bitcoin goes up, guess what? You're subject to the dispersion rate of the code at that moment. What is it, 900 a day right now? It'll go to 450 a day when the halving halves.
Yeah.
And then 225 4 years after that. So it doesn't matter how much the price of Bitcoin goes up. You could be incentivized to mine more Bitcoin. You are only going to get what the code gives you. And that's not true with any other commodity. When the price of a commodity goes up, those who are in charge or incentivized to produce more will do so. Increasing the supply. And what happens when we increase the supply of something, Bitta?
It loses its value.
The price goes down, unless demand exceeds it.
Right.
But people are greedy and they will always supply more. Right? You can count on that.
We're interesting beings. We are interesting beings.
Bitrue has a nice staking feature for Bitcoin. Well, yes, it does, but I don't like Bitrue, even though I've got 5 things on there staking on the Power Piggy. Because my friend Bitta, you know what? Somebody called me a bad name the other day. They said, Jerry, you're a yield whore. You're a yield whore. Like,
that's not a bad thing.
Yeah, but I mean, he said it in a way like it was bad. I was like, I just want to earn something every day on the assets that I put my money into.
Yeah, it's not a bad thing. The idea of it is not a bad thing, but like the wording is kind of like. Yeah,
like I don't want to wear a yield whore T-shirt or anything. I'm a yield whore.
Oh, that might just catch on. Be careful. That might catch on. Oh Lord. You know that what I was sad about was I wanted to open a Celcius account. At one time you and I talked, and then I went through the whole process, and then when I got done, it told me I couldn't open it because of the state I live in. And I was really upset. Yeah. I was like, if they don't, they should have it, that be the first thing instead of having you go through the whole process and then telling you your state doesn't qualify for it. It's like you had, and then I tried to delete the account and contact their customer service and stuff, and they said, "Oh, it's already created. We can't delete it now." It's like, what?
Well, good. It'll sit there empty. I hope it crashes your servers.
It was like irritating because I would have liked to know that before I went through the whole process of doing that. But
well, if that's the worst thing that happened to you in the platform-based borrowing lending world, then good for you. Right on. I know that it's time. I'm looking at the clock. We had a great show tonight. I want to make sure closing thoughts or final thoughts happen, and I want to give Brady a heads up with the final thoughts. Let Brady know that I will go ahead and press the button to bring him in. And so I'll just let him know right now. I'm going to bring you in, Brady, and we'll do final thoughts, starting with Bitta, and give Brady time to collect his thoughts. So, Bitta, final thoughts for tonight, this week, what life's like being unemployed, but being an entrepreneur, what's shaking and baking?
Oh, it's a wonderful feeling. I thought I was going to be sad or nervous or something, but it just feels very liberating. I don't know why, but I just feel very at ease and liberated right now. And just knowing that if I put just a little bit more effort and a little bit more time in studying the crypto world without distraction, then I can go back to work at peace and a lot more educated. I feel like that would serve me a lot more than continuing to work at this point in my life. So,
well, what did I say? The number one investment any of us can make is in our own education, and you're definitely doing that. So I look forward to our chat after the show. See you in a minute. Brady.
Yes, sir.
Final thoughts, young man. What'd you think of tonight's show?
I love the topic because tax-free anything is always a good thing. However, I always scratch my head wondering what's in it for the other guy. But as I always do, I think I might have to dive into that research myself. I remember looking at all different different IRA changes to, the plans over the years, and it was just a list of, the congressional people have names for the things that they put through Congress, and it's just horrible, disgustingness. So I'll have to do that and figure out. Obviously, it's a good idea to do IRAs. It just grinds my gears. So I guess that's my final thought. Even though it's tax-free money, it's still like, I don't like the government, but I guess they're willing to give me free money, so why not? I don't know.
Well, they're not giving you, it's your money.
So then why do they need it?
Incentivizing you to put your money into assets while you're working, right? While you're working.
True.
To put your money into assets with the promise of being able to acquire, to utilize them in the disbursement tax-free. You're still paying the tax up front.
Right. That's
just not on
that part makes sense. It just seems like I'm getting more out of my Nexo account than, like, I get the tax-free incentive, but then why do they need to hold it?
Yeah.
Why can't I give it to someone else like I'm doing with Nexo? Like what? So it's just like this privilege thing that obviously makes sense to everyone because it's a tax incentive, but it's like, so you pay someone the $30 to look over the piggy bank for you so that you can then have it when you're old enough and grown up enough.
Right.
So it's like a weird, like I think, or at least I hope it'll kind of go off into the sunset as a traditional idea that has outwelcomed its stay, and we go towards the DeFi or the digital retirement side, whichever that's going to be. But I guess that's what we have to look forward to.
Right on, man. Really good final thought, man. I'll see you backstage in just a minute. You know, I'm always thinking, right? I'm always thinking about ways I can improve myself as an investor. And, you know, lines or paths of thought, journeys, intellectual journeys that I've taken have led me to different paths. And so, like, for instance, for me, I believe through the research I've done that I will be able to live a collateralized life tax-free. Now, that may not work or be the best solution for everybody. You know, something like a taxed dollar going into an account that I can withdraw after capital appreciation and I quote unquote officially retire and receive those disbursements in a, you know, unencumbered by any tax liability is very attractive. It's something I've talked to my son about. I have a 23-year-old son, be 24 this year. And something like this is something I want him to consider. And I've walked through all the different math and want him to understand and take a look at these things. But it's not like any one thing is appropriate for everybody, right? So hopefully what tonight did was spur some thought, right? Thinking about just looking at your retirement. Maybe, you know, you got a great employer and they got a great plan. Well, if you understood what that really is costing versus what this is costing, this may be a better option than that. Maybe not. You won't know until you do the investigation. And that is the point. Stimulate thought, provoke action, do the work, come back with real answers, and make a grounded decision. It's pretty easy. I hope you liked the show tonight, folks. I want to thank each and every one of you that chimed in with your participation in the chat. For those of you that have tuned in from Facebook or Periscope, YouTube, great to have you. And especially the continued support of the folks that have subscribed to the YouTube channel. Your subscription means a ton to me. The fact that you hit the like button and send messages on Twitter about the show or refer your friends, it means a ton to me. I am on the same journey you are. I'm just trying to become a better investor so that I can produce better outcomes. So I look forward to I have a great show lined up for you next week. I'm not going to give any spoilers, but it is a do not miss next week. I'm anticipating a major home run. It's going to be pretty cool. And it's coming from my guest has nothing to do with crypto. It's going to be a good show. I think you're going to love it, especially because he doesn't come from crypto, but he's going to bring something that is going to blow some minds. I am just excited about it. So anyway, folks, everybody, thank you very much. Who did I not? Patsy, nice to see you come in. I didn't get to shout you out earlier in the night. Thank you, Patsy. Good to have you. Everybody, thank you for your submission of your questions. Thank you so much for those of you that have caught this on a review that couldn't be with us here live, but yet you tuned into the channel and watched the rebroadcast. Until next week, everybody. Pura Vida.